Meanwhile, Fed President Raphael Bostic warning inflation is not just a one-time blip. He says the tariff impact is more prolonged as opposed to a one-time spike in cost. I want to bring in Andersen Capital Management Chief Investment Officer Peter Andersen. Peter, I want to get your reaction here. And just to let you know, there's a headline crossing here because obviously the EU is one of the really important deals that market participants like yourself are watching. And we're getting this headline that from an EU spokesperson that the EU is going to continue to work on July 9th deadline in the U.S. and the tariff fight. Your reaction?
Well, that sounds certainly very favorable, especially the quotes that you just announced earlier. Those that wait seem to be in much more of a conundrum than those that step up and are expressing themselves willing to make a deal early. So I think that's probably a good sign. I think the bad signs are those that you just don't hear from, and they're going to wait until the very end because President Trump has said those that wait will probably be much more penalized than those that step forward and show some good faith in negotiations.
So I want to take a look at yields because, and kind of staying with this inflation story and the tariff story, because right now, you know, the yield picture is obviously where you're going to see the bond market, which has been really the biggest check, if you think about it, on the tariff fight. And right now, as you can see, we're at 4.358%. That's the 10-year, which is up 1.5 basis points. As we're moving into this new week with these tariffs, do you think that the bond market is telling us something?
Well, I think the bond market is more responding to this incredible bout of stable economic data that we've had rather than the tariffs. I mean, we're all trying to struggle with a moving target about figuring out the tariffs. That's a much harder puzzle to solve, I think, and we have to be, sadly, in a wait-and-see mode. But all the economic data has provided a wonderful backdrop for the big, beautiful bill and the tariff. So I'm not at all worried that the 10-year, for instance, is going to react extremely unpredictably to what the tariffs might present to us over the next 30 days. I think it's more dependent upon the economic data, which looks, in my view, fantastic.
Okay, I want to ask you about debt deficits because President Trump did sign the big, beautiful bill that cuts taxes. It boosts defense spending. You got more money for the border in there, cracks down, obviously, on illegal immigration. Oil prices, though, we saw a little bit of pressure on Brent this morning, and we still do. WTI slightly higher. OPEC Plus actually surprised the markets with that bigger than expected output hike for August. So they're putting out more oil into the world market. That's keeping a floor on prices, obviously, right now. At the same time, oil could be inflationary if that changes.
Yeah, that could be, but it does seem to be fairly stable. And, you know, the deficit, Cheryl, has been around since the dawn of economics, frankly, and we always fret about that. And there's endless analysis about it. But if you've noticed, most cases, it makes for a good topic for economists. But in terms of the markets, I think they're responding much more practically to the incentives that have been placed in the big, beautiful bill. I mean, for instance, the encouraging investments now where you can write off capital equipment in 1 year versus a usual depreciation schedule, and the technology companies can write off the cost of building a new factory in a year. That is marvelous in terms of an incentive to get this U.S. economy even more supercharged than it appears to be now.
Real quick, Peter, before you run, like 10 seconds, the $3.7 trillion in added debt from the bill, does that worry you or no?
I'm more focused on the positives of this thing, and I think that the deficit is more of an abstraction, and people should not focus on that. I think they should focus on what's ahead in the great investments that this bill has encouraged.
Great. Peter Andersen, thank you, Peter. Appreciate it.
You're welcome.
All right.